Gold today has reversed from close to 1914 levels and has achieved a high of 1926. And at the same, oil has been trading in range precisely the no trade zone as we discussed in our morning update with the Asia and Europe session. Now, what to expect from gold and crude oil with this US session? Which position you should take in order to profit? We will see with the help of and indicators. If you think that the content is adding value to your trading decisions, do like, share, subscribe, and comment. Do press the bell which keeps you updated with the twice a day analysis. Now look at the hourly charts of gold. See prices retrace towards the 20 period. Right now trading with almost the support at around the 20 period moving average. Also, if you look at the drop and the retracement, it is in the retracement zone here, not yet the reversal. Only if it stays above 1930-32 levels, you can say that the prices are trying to retrace and reverse the bottom of this channel again at around 1914-15 level. So that is the level below which we can initiate a selling position here. Now what has happened so far? See, first of all, the week beginning there is a gap which needs to be filled. I will definitely watch out if it continues to move upside and tries to or strives to achieve to fill the gap. Yes, if it stays above 1926, we can expect that possibly gold might further fly and 1930-32 levels will be achieved. At the same time, if you look at the formation, see the drop, retracement, higher lows, retracement again, and higher highs. So yes, this is right now in this retracement zone and wait for it to break past on the upside. Beyond that, more bullishness is going to prevail here. If you look at the stochastic, this is overbought. MACD has crossed over for a buying position here, trying to trade with slight divergence. RSI is flat near to top. Likewise, if you look at the 2-hour chart, similar observation, 1914-15 levels again is going to be the selling position below which more bearishness is going to prevail. Also, so far higher lows, higher highs. So this is still retracing. Stochastic looking upwards. MACD is bearish. It is not yet, but yes, we can see it converging a bit. RSI looking upwards, trying to stay bullish. Coming to 3 hour. Now on the 3-hour chart, the moving averages have come up. Upside, the prices is try to get the support from the same levels and now trying to look upwards, trying to move upwards, higher lows, higher highs. Same observation. However, on the downside, there is not much gap which needs to be filled. The stochastic is looking upwards. The MACD is bearish. It is trading with divergence. It is still looking downwards. RSI is very near to the overbought zone. Coming to the 4-hour chart, similar observation, nothing different. Here the 20 period moving average is right now sitting at around 19.8, 19.10 level, which is also an achievable level. Once it stays below 1914, you can stay short for 1908 levels, and below that more bearishness may prevail, which is going to take the prices towards 1900. The stochastic is rising. MACD is trading with slight bearish bias. RSI is very near to the overbought zone. Coming to the daily chart. Now see, on the daily charts right now these two candles are identically symmetrical, opening and closing at the same levels, and the top at the same level. The bottom is higher low. So yes, in fact a reversal from these levels cannot be denied. In fact, I will not recommend you to sell or wait for 1914, but in fact you can sell here at 1918 levels itself. Wait for 1914, then 1908 level. This is one observation, which is one position you can take. And the second, the buying entry is to be taken above 1928, beyond which you can expect 32, 36 levels and then 40 levels. So in between 1918 and 28, right now we are not going to take any position for this $10. If you are selling, we have to be cautious for 1914 and 1908, 1910 zone. Below that, certainly we are looking at 1900 levels. The stochastic is still overbought. MACD is divergent. MACD is bullish. It is flattened here. So the candle might try to converge. RSI is flat. So looking at this, sell at 1918, expect 1914, 1910-08 levels as the first target, and then below that more bearishness is going to prevail. At the same time, above 1928, we can initiate a buying position for 32, 36 and 40. See, 1932 is the level beyond which the bullishness is going to increase, and beyond 1936, it is to be considered for a reversal where we are looking at 1950 levels as well. Possibility exists that it can strive to achieve those levels. It can show you swings here. Trade accordingly, trade profitably, trade with a stop loss and a trailing stop loss. Now let's have a look at crude oil. And before we proceed, if you want to learn this art, you can join my mentorship batch. The 26th batch started yesterday on 16th October. 27th batch is going to start on November 28th. Register yourself, love itself, reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, oil on the hourly charts, after the drop here, it is trying to retrace. It can try to uh, achieve towards 86 levels. But if you look at the hourly charts, you will find here, see, 85.8 appears to be a greater resistance as of now. Beyond this, we can expect 86, and if it stays above 86, we can look forward to 86.4, 86.6 zone. It is only above 86.6, more bullishness is going to be seen here. Thus, buying at around 85.8 levels, the same levels is what we discussed in the Asia and Europe session update, that beyond 85.8 is where bullishness may prevail, and right now it is getting maximum resistance from the same levels. At the same time, on the downside, 85 levels appearing to be a great support. And see, this is what is the power of levels here. We have discussed in our Asia and Europe session update that in between 85 and 85.8 we are not going to take any trade, and that is what is respected so far. Stochastic near to overbought, MACD crossing over here for buy. See, this wave is done, this wave is done, and if it continues to rise from here, more bullishness may prevail. RSI flat coming to 2. Similar observation on the 2-hour chart, drop, retracement. See, it is still trading in this bearish channel, and hence once it stays below 85, we can expect 84.5 and 84 levels as the maximum support level. Yes, it can try to achieve those levels. Stochastic rising, MACD is still bearish, RSI is flat. Coming to 3-hour, on the 3-hour charts, from the bottom here, rise, retracement, and the lows here are still far below at around 83 levels. So I will definitely expect, if it continues to drop below 85 levels, certainly the bearishness is going to prevail here. The stochastic rising, the MACD is bearish, RSI is flat. Coming to 4-hour, on the 4-hour charts, the important observation is the moving averages, which is crossed over the 20 and 50 period, and it is showing a little divergence, signs of bullishness. Also, the support it has shown, the prices move towards the 20 and 50 period, and now again reversed. So once it stays above 85.8, bullishness is going to prevail, while below 85 is where the bears will take over. On the upside, we have to be extremely cautious, even as long as double top levels can be achieved here, and from there also the prices might retrace. Thus, buying at 85.8, first resistance should be at 86, then 86.4, 86.6 zone is where we have to be extremely careful. See, these are the prices from where the retracement and the reversal was seen. The stochastic rising from the oversold, MACD has crossed over here, trying to trade with slight divergence. RSI is flat. Coming to the daily, now look at the daily chart. See, after forming the highs here, lows here, it is trying to reverse here, trying to move towards the 20 period, and from there again the prices might reverse. Specifically, staying below 85, just stay short for 84.2, 84 levels. These levels will get achieved staying below 85, and above 86 levels is where the bulls might try to take over. As long as it stays between this zone, we have to remain extremely cautious. Stochastic overbought. See, this is the reason, that is the only reason where I am expecting it to stay a bit bullish, that moving average, that is MACD, has converged here. It must try to cross over sooner or later. Right now it is just converged, but from here, if it is extremely bearish, more divergence to be expected. Right now it is on the verge of a crossover. This suggests that it can in fact show a reverse. Thus, for the day, I will recommend you to buy at 85.8 and expect 86, 86.4, 86.6 levels as the next resistance, and then beyond that, sky is the limit. We are looking forward to 87.2, 88 levels again. On the downside, below 85 is where you can take a selling position. Below 85 is where you can expect 80, 84.5 and 84. 84 is going to be the next major for the day. So take your positions accordingly. Trade with the stop loss and a trailing stop loss. Do like, share, subscribe and comment. Join my mentorship batch. Join my signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead.